As I said the last segment, we're waiting between the Jay Powell testimony up on Capitol Hill that we had on Tuesday and Wednesday and the big jobs numbers coming out tomorrow to really give us a preview of those jobs numbers and how they might affect the Federal Reserve. We turned on to Michael McKee. He's Bloomberg International Economics and Policy Correspondent. Mike, thanks so much for being with us. What do we expect? What's consensus on the jobs for tomorrow?
Well, consensus is we go back to the pattern that we were in, to the trend that we had before the January numbers. The consensus forecast is 225,000 jobs. The last month, it was 517,000, you'll remember, and that basically changed everyone's mind on Wall Street and turned thinking about the Fed upside down. Everybody thought they were sort of on a glide path to maybe being done with raising interest rates, and then we got that huge jobs number followed by a strong CPI number, and everybody then started pricing in extra rate moves, and now they're talking about the possibility of another half percentage point move on March 22nd. So tomorrow does have a lot of import. If we go back to where we were, the pressure is still on probably to do more. We'll see what happens when we get the CPI numbers. But if we do drop below consensus, maybe into the 100,000s, then we could see the Fed back off a little bit and not be quite as aggressive sounding at their next meeting.
Mike, are we seeing any little indications of any loosening of the job market elsewhere? I mean, certainly we got the jobless claims numbers out today. The surprise, they were higher than people expected them to be, I think by 21,000 or so. And there was also a Bloomberg new economy report, as I recall this morning, about the construction industry, that maybe it's not quite as tight as it was. Are we seeing some glimmers with respect to labor?
Yeah, you could call them maybe green shoots. That's appropriate since it's almost spring, but we're not quite there yet. We did see in the JOLTS numbers that came out yesterday, everybody watching for those, big decline, the biggest ever really in job openings for construction workers. And people have been wondering why that's been so strong, even though the Fed's raised interest rates so much. Mortgage rates have gone up and activity's really dropped off. Builders have been working through backlogs, but maybe now they're going to start cutting workers. We'll see tomorrow if that's the case. Unfortunately, the jobless claims numbers come with a big asterisk. When New York schools go on vacation, which they did last week as spring break, New York education employees can file for unemployment benefits. And so for a week, they get a check, and it pushes up those numbers, this time by 16,000. And if you subtract those 16,000 from what we got, you're back to 195, still the same old numbers in terms of jobless claims. So the evidence that the economy and hiring is slowing is still very slim.
So Mike, none of us begrudge somebody getting a job, for goodness sakes. That's a good thing, all things being equal. But if you're fighting inflation, even more important than whether people are employed is how much they're getting paid. What are we seeing in terms of wage increases, and what do you think we may expect tomorrow?
Wage increases have been relatively small. They've slowed down a little bit, but not very much. And the latest beige book yesterday said that in many districts, Fed districts, companies are seeing the demands for higher wages slow down some, but they're still elevated. And they still have a ways to go to get down to what the Fed would think is a sustainable level. But you put your finger on the big political issue up on Capitol Hill the last 2 days with Jay Powell. A lot of members of Congress arguing that the Fed is sacrificing the American worker in order to bring down inflation, because if unemployment goes up by a percentage point, as the Fed forecasts, that's about 1.5 million, 2 million jobs. Powell doesn't have a lot to say about it. It's his job to bring down inflation, but it is a kind of a flashpoint right now.
Mike, you spent a good part of your career covering the Federal Reserve, and we're the better for it. We now have a name that's sort of being floated right now to replace Lael Brainerd as the vice chair of the Federal Reserve. I'm happy to say that she is from Northwestern University, which is not Michigan, but it is Big Ten, so that says something good for her. So what do we know about her, and do you think people are overreacting to the claim that she's sort of a dove?
You only like people who Michigan can beat, I think, David. Janice Eberly is an associate dean at Northwestern University. She's been in the economics forefront for quite some time, does a lot of work on labor issues and monetary policy issues, a regular at many forums, including Jackson Hole. She was the chief economist at the Treasury Department, and so she has some familiarity with Washington and how things work. The president is we understand looking for somebody who might be on the dovish side, but the trail is not very long for people who haven't actually been at the Fed in terms of whether they think you want to be hawkish or dovish. She might lean a little more dovish, all things being equal, but as I said, right now it's the Fed's job to bring inflation down. So I don't think it really matters too much for the next year or so. They're definitely going to be keeping interest rates high. It'll be after that that matters. Now, she is rated as one of the favorites. Our White House people have been told that she tops the list, but she hasn't met with the president yet. So we're still a little ways away from a decision.